Hitachi Energy has completed 75 years in India. How is the company celebrating this milestone and what lies ahead for the future? Joining us right now to speak about their global plans and also how the company wants to grow the business in India. Joining us today is Andreas Schierenbeck, the global CEO of Hitachi Energy, and also joining us is Venu, the MD and CEO of Hitachi Energy India Limited. Andreas, if I can begin with you, there is an announcement that you have made as far as a future investment for India. Give us a sense, how big is this investment and what do you plan to do with it?
Yeah, we announced today that we are going to invest around 250 million US in India, and Venu will be more in the details. And this is part of our global investment plan that we in the next 2.5 years investing $6 billion worldwide and expanding transformer capacity and other businesses.
Right. Yeah. Venu, if I were to ask you, this comes at a critical time when India is also speeding up its energy transition. Tell us, how are you looking to increase capacity in India, increase skilling? Yeah. How is this money going to be used and deployed?
Absolutely. As I said, energy transition tailwinds are very huge in India. Just give one example, that government of India has an ambitious plans to add 500 gigawatt of renewable capacity by 2030. To reach that, India as a country, we need to do 2 to 3 times more than what we have been doing it. And that's a big opportunity for Hitachi Energy. And looking at that kind of opportunities, and we have started investing. We have started investing even ever since we carved out from our previous owner. We never stopped investing even during COVID time also. In the last 3 years, we have added 4 greenfield factories. And this new investment, which we are talking about 2,000 crores in the next 4 to 5 years, is basically an annual run rate capex of 100 crores to 400 crores per year is what we are going to spend in the next 4 or 5 years in that. So primarily, we are spending this enhancing our transformer capacity and enhancing the key components required for the transformer, such as insulation and also HVDC, which is a very critical technology for this energy transition.
Right. So are you going to be looking at setting up additional capacity, hiring more workforce as a part of it as well?
So at least 30% more workforce we are going to add in the next 3 years, 30% more.
And in terms of manufacturing capacity?
In terms of manufacturing capacity, some of our product lines, we're going to double it in the next 4 years.
Right. Andreas, if I were to come to you right now, give us a sense of how India is contributing to your global growth story. If I look at the exports continue to grow in a sustained manner, but how does India contribute to your global revenues and among your key markets?
India is one of our key markets because, as Venu already mentioned, the energy transition is in full swing. There's a lot of tailwind, a lot of demand, HVDC links, rebuild of renewables going on. So there's a lot of stuff going on, and we see that, and that's why we are definitely investing in India. India is, of course, not only a very interesting market for us as well. There's production footprint, and around 60–70% of our global portfolio is already manufactured in India, at least partly. So it's very interesting as well for export. And of course, the human resources. We find skilled people in India, and at the moment, if you look at it from a global perspective, you hire where you can hire, where you find the resources and the talents, and that's definitely in India at the moment.
Right. Andreas, if I were to ask you, what makes you most bullish about India? When you speak about the global economy right now, which is confronted with a very volatile geopolitical situation, so what makes you bullish, and what would be some of the important points you're looking at?
It's a very complex question. I did business in India for a long time, and I think that's now a period where I see there is sustainable growth. There's a good planning ahead, and I see the drive to invest in renewables is a well thought through ongoing. And from that point of view, I believe that we will see for quite a while some sustainable growth here and a kind of stability in the region as well.
Right. Venu, if we were to look at the order book, at the end of Q1 of FY25, your order book was around 2,436 crores?
No, I think maybe I have to correct that.
A backlog, with an order backlog of about 8,300 crores.
Right. Yeah.
So how do you expect this order book to grow by the end of FY25?
Yeah. So as I said, we don't give a forward-looking statement, but what we can give you is a little bit of, the market is growing X, and we said we wanted to go in line with the market or higher than the market, and that has been the case in the last 4 years. We're continuously outgrowing the market. And we continue to do that because we are now adding capacities. We are bringing the new products. And we are also unveiling the new technology. And those things will add further enhancing our order books going forward.
Right. What is the possible growth run rate that we can expect from Hitachi Energy India in FY25?
Yeah, I think the market has been growing so far high single digit. We are growing a double digit in terms of our orders. And we believe that at least we can sustain this.
Right. Yeah. Andreas, if we look at your biggest market right now, would it be right to say that China is your biggest market right now in terms of revenues?
No, I wouldn't say so. China is an important market, but not the biggest market by far. Our biggest market is Europe, followed by North America.
And where does India fall in the pecking order?
I think it's a very strong third place. Of course, it's always difficult to say with big orders like HVDC links. That's the question how you normalize that. But as Venu already mentioned, this double-digit growth on a very high base already is definitely something which is for us very interesting. That's why we're investing here.
Right. The reason why I asked you about China is because we read that Hitachi Energy has substantially been increasing manufacturing capacity for transformers in China. How is that important in your larger strategy?
Well, we are following a strategy that we diversify our production globally for a lot of reasons. First of all, we have to have a global footprint because our customers are global. We want to optimize our supply chain. So actually, not a single product is built in one country alone. You're having always deliveries from India, from China, from North America, just to manage it in the right way. With these logistic challenges we have, sometimes with transportation, we have to stay flexible. And of course, it works as a kind of natural hedge. If you produce in China or India with Indian or Chinese workers buying the material here and delivering to local customers, you have a natural hedge. And that's definitely valuable for us.
Right. I'd like to ask you about the strategic alignment of two nations, India and United States, when it comes to clean energy manufacturing. Very recently, a joint statement was issued by the two countries saying that we want to set up stronger clean energy technology component manufacturing supply chains in India because we cannot be overly dependent on one country, that is China. As a result, do you think that in the next 10 years, is anything going to change in a major way as far as the supply chain of clean energy components go?
It's difficult to say. I think with the growth we see in the market, we have to ramp up capacity for production anyway, and we're doing it in a global way, just to mitigate the supply chain risk. So from that point of view, I wouldn't expect in our industry a dramatic change from left to right or right to left, nothing in that sense. You will see massive investments in capacity increase on a worldwide scale, as we have done it announced already. And just this growth will I would say, mitigate all the other actions. So the growth will be globally.
But what makes China an important market? The reason why I'm asking this is because India wants to grow as a manufacturing country, as a country which is a leader in manufacturing of renewable energy and clean energy technology components. What does one really get in China which makes it a strong market for companies to go and manufacture in?
I think maybe Andreas can add more, but from my standpoint, I think China has a supply base, end-to-end supply base. You name anything, it's available, whether it's a casting, whether it's a insulating material, all the things are available end-to-end for any particular segment, sector related things in that. That makes manufacturing companies easy availability of those raw material, components, sub-assemblies, etc. So that's easy for that. So I think in India it's happening. So as you recall, the government of India has set up a lot of production linked incentive schemes, creating the clusters of those things. I think that should help us going forward, create those kind of availability of all those components, raw materials, so that we are able to produce end-to-end manufacturing in that.
Right. Andreas, would you like to add to that? For the last few years, ever since the pandemic, we've been hearing about the China Plus One strategy. How much has really changed on the ground as far as diversification or pulling away from China goes?
We are not pulling away from China. It's a huge market, and the major production capacity in China for our business is actually designated to China. Of course, there are some exports, and you're optimizing the global supply chain as we're doing it on a global level. So there's no intention from us to move away from that. If they are critical components maybe produced in China, and I'm not aware of that we have that of course would be a different question. But transformers, circuit breakers, all the equipment, it's more a matter or more constraints of getting the production capacity up instead of having critical components.
Right. Venu, if we were to ask you about exports once again, as to how much is Hitachi Energy globally sourcing from India, that is also going to be a key denominator going forward. How do you see that trajectory going forward?
No, I think when we started our company, our exports were in the range of 15% of our total orders, total revenue. And we set ourselves as a target to reach 25% by end of FY22, and then we reached 1 year ahead of the curve. So today, right now, we are stabilizing this 25%. So how we reach 25% is we have allocated markets. So there we develop those markets along with the local teams, and then we sell our portfolio. And the second one is some of the products we only manufacture in India. So they call it the global feeder factories, and we sell that. And the third one is we also manufacture the components here, which are required for the end assemblies or end products in that. So that will go into various factories around the world in that. So right now our strategy is to stabilize this 25%. In case-to-case basis, when we get a large project, we'll get a lump. Like we announced a Marinus Link, the HVDC project from Australia. So that will take us maybe from 25 to 35%. But in the medium term, we would like to stabilize around 25 to 30%.
Talking about geopolitics again, because India and United States, under the Quad agreement, have decided to diversify energy investments in the Indo-Pacific countries. India wants to be an energy supplier in the region to countries like Bangladesh, Sri Lanka. Do you see that as a growth opportunity?
Absolutely. We definitely see the growth opportunity in that, acceptability of Indian-made products, whether it is in Australia or India or in US, is now a little bit more easy in that. For example, we have set up our greenfield power quality factory in Bangalore, and off of that production actually will go to US. It has been going into the US. Similarly, the new factory which we set it up in Chennai for the valve manufacturing, and part of the valves we are selling it to in Australia in that. I see that going forward, so this is going to be accelerating in that.
Right. Andreas, if we were to speak about the global regulatory system, we've seen the Inflation Reduction Act in the United States. EU has started putting in very strict norms when it comes to emissions, when it comes to energy transition. How do you think this is going to impact businesses in the next few years? And what would be your advice to Indian companies in the renewable energy sector and businesses in general, which are looking to export to Europe and the United States?
I think you mentioned a good point. I think the mechanism from a regulatory point of view are very different from Europe and from the US. IRA is rather straightforward. EU is always a little bit more complicated and cumbersome. But I think the direction is always the same. We want to globally reduce emissions, we want to invest in renewable energy, and we want to incentivize that. I think in India, I don't know the regulations or the mechanisms there, but I would recommend to think in the same way. I would rather think about an easy scheme instead of a very complicated one, because normally if you make it too complicated, it takes too long and then investments are not flowing. And I would recommend as well, or ask, if you want to save time in the energy transition, I think we have to change a little bit how we are working as an industry with the regulatory body. In the US, the FERC has just increased the planning horizon to 20 years instead of 10 years. We see changes that we are able to have framework agreements with our customers, that they can already book slots ahead of the time, even if they don't know actually when it's something to be built, just to reduce the lead times and being faster.
Right. In fact, your earnings call transcript said that you hope that deployment of technology to make grids flexible, digital, and secure will continue to be done in a smooth manner. This was one of the takeaways from the earnings call. I'd like to ask you, Venu, when it comes to the regulatory landscape in India, what can be done better right now?
Yeah. No, I think, as I said, one example, just wanted to start. To reach 500 gigawatt, you need to do 2 to 3 times more than what we have to do. As a country, we need to achieve that, right? That is not possible to achieve if you continue to do the same way, project after project. We start bidding, we start doing it. we need a lot of visibility. Visibility means a very confirmed visibility in that. So the regulators also need to clear a lot of projects in a bulk, so they are able to order in all that. Then we are able to secure the supply chains, engineering, and the manufacturing, etc. in that. So it needs a lot of planning. And 2.5 times of the market is not possible to achieve in the similar period of time. So that's where we call going from a project-based to the program-based approach is what we expect regulators to look at it seriously, and also other policymakers need to also look at in that.
All right, I'll request you to hold on to that thought. We're taking a short break, but don't go anywhere. This conversation with the Hitachi Energy management continues on the other side. Welcome back. You're watching CNBC-TV18, and we are in a special conversation with the Hitachi Energy management. Joining us right now is Andreas Schierenbeck, the global CEO of Hitachi Energy, and also the MD and CEO of the India business, which is called Hitachi Energy India Limited, and Venu. Now, speaking about the union budget, 19,100 crores was allocated to the Ministry of New and Renewable Energy. Out of this, 13,050 crores went for strategic interventions of green hydrogen transition program. 2.5 lakh crore for modernization of the railways as well. How do you think Hitachi Energy in India is going to benefit from some of these investments?
So part of the investments are growing on the renewable, and part of the investments from the government standpoint going on the grid modernization and green hydrogen, green corridors, and also the new energy carriers such as green hydrogen, etc. In that, all those things are our available addressable market in that. So in all of those segments, we sell our entire portfolio. So whether it's a transformer, high voltage, grid integration, or HVDC, all those things are in that. So we expect that our addressable market is also growing in line with the market growth.
Right. In the next 5 to 10 years, how do you expect the order book, especially from the government side, especially from PSUs in the railway sector, Vande Bharat, for example, to contribute to your growth story?
No, if you really look at our whole order book, like utilities is one of the most major player, because that's where our transmission and other things will come, and that will remain there. But the new segments, rail, for example, today, rail is in the range of 15 to 20% of order book. So that is continue to be in the same range or grow up slightly. But like a data centers, like industrial electrification, those things will be adding more in that. If you really look at an overall segment-wise split, while utilities is continue to have a dominant role, but then the new segments, data centers, electrification, and industrial electrification, and that's going to be added, because electricity is going to be the backbone of the entire energy system going forward, and that's where we bring our portfolio to our customers.
Right. Andreas, if we ask you about a global picture, and again, are there any other new verticals that Hitachi Energy would be interested in getting into or is exploring for the future? Because when you speak about the energy landscape, energy transition, the opportunity is quite big.
Well, I think the newest thing what we are seeing are data center. In the scale, we haven't seen it before. And especially the Gen AI data center are definitely a big opportunity for everybody. Not because they are bigger in size, so we're talking about connection loads which are much higher, as well from their behavior, because if they start learning, they're consuming quite a lot of energy. If they stop learning, this goes down in seconds or minutes. So that's definitely a new growth trend, and especially we see that in North America and in Asia.
Any kind of M&As that you're looking for in the Indian market?
We're always looking at M&A. But of course, with that kind of industry, the market for M&A is very tight. So targets are very expensive, and we are very picky, because we have actually quite a lot what we need. But not to say if there's an interesting opportunity, we are definitely interested and we're looking into that.
Right. Venu, add to it I know it's very difficult to give out any kind of talks or negotiations, but if there were to be talks on M&As, what kind of M&As would you like to explore?
No, as Andreas rightly said, we have everything in our portfolio, but we look at kind of some white spots in our portfolio, very smaller things. Those are the things probably we definitely look at it.
Okay. Now, speaking about the global picture as far as the energy transition goes, where are we right now in terms of our global goals? We are nearing the next COP. There are wars going on. There are 2 wars going on, and escalating at the same time. How much of a setback has that been for energy transition?
I think it has not been a setback for energy transition at all, if you ask me. Actually, I would argue quite the opposite, because clearly the situation with geopolitical instabilities, wars, and all these things have shown that energy has not only to be affordable and has to be sustainable, it has to be safe and secure. And the dependency from outside resources, LNG, gas molecules, and whatever, was very obvious. So I would argue actually it has accelerated the energy transition, because wind and solar is easily available. Yes, it has some complex situations, but they are manageable. And by the way, the renewables are at the moment the cheapest way to generate electricity. So I would have said has accelerated that, just because of the geopolitics has fueled that interest even more and has made us all aware, especially in Europe, what it means that energy has to be reliable and safe.
It has to be, because your supply lines can be completely disrupted when a war breaks out.
Absolutely.
How far are we in that journey for self-reliance in energy? Quite far right now. But where are some of the areas where India needs to really work hard to get the energy transition right?
I think where we, India as a country, where really we did well is adding a renewable, not only adding at a scale, but also adding at a price level that is affordable as a country as a whole in that. So that has been great. Similarly, the scale of, the LED bulbs of 400,000. So those are the things, with the scale we are able to bring the cost down, and we are able to, penetrate at a scale and the speed that is required for the transition. Where probably we need to do similar thing is on the grids, because the grids are extremely important. So we know that, solar and the wind only can generate in the pockets, but whereas those things can come to at a load center, such as, wherever the load is required in that. So that needs a lot of transmission, flexible transmission, so you are able to adjust the intermittency required in that. I think there we can do the same way as we have done in other places in that.
When it comes to incentives, give us a sense of the government schemes which you are already participating in, and in future, if there were certain incentives, tax breaks, or policy interventions you would be looking for, what could those be? Which could sweeten the deal if you compare to markets like China, Europe, and US?
No, again, I'm talking about same, the HVDC, which used to be a very, niche technology, has become a mainstream technology today because of its inherent characteristics, etc., able to integrate large-scale renewables and also able to manage the grids in that. So that, if you really want increase the local content, maybe one area where I would really urge the government to look at this HVDC localization as one of the incentive for companies like us to take part actively in that.
Right. Andreas, one question that we would like to ask you: what is the most challenging aspect of being a CEO in the energy sector right now?
That's an interesting question.
Something that gives you sleepless nights.
I think it was always challenging being a CEO in the energy sector years before and now, but I think now the challenging part is to manage the growth. I think that's a good task to have on hand. Because really finally we are moving into an energy change in the system, a lot of technological changes, but managing the growth is one of the challenging tasks on that scale.
Managing growth. Any final thoughts that you would like to leave us with, Venu, as far as India's priorities go over the next 5 years? How do you see India becoming a leader in the manufacturing of clean energy technologies?
Exactly. So the energy digital world, EDW 75, is all about, we are celebrating not only our 75-year legacy, but we are laying the foundation for the next 75 years. I expect that manufacturing is innovation-led, production-led, and it needs a lot of end-to-end components involved in that. I'm really looking forward India having those kind of attributes in that.
All right. Fantastic talking to you, Venu and Andreas. Thank you very much for being with us on the program. So that's a wrap of our special interview with the Hitachi Energy management on their 75 years in India and the road ahead to the future. Thank you for watching. Goodbye.